The rand was trading stronger earlier today in line with other emerging market currencies as the dollar slipped ahead of key U.S. economic data. In early trade, the currency traded at 19.24 against the dollar. Let's get you some analysis. Grant Nader is a senior portfolio manager at Benguela Global Fund Managers, and he joins us now live. Grant, it's great to talk to you. The rand, as I say, trading slightly stronger today and in line with other emerging market currencies. What was driving that improvement?
Well, actually, I think it stems back to the budget speech from last week still. Initially the rand had a positive reaction, but then it gave up at least 2% in the week past that. And if I look at it now, it really is moving. It's stronger than most other currencies, but it also was weaker than most. So I think it overreacted somewhat, and it's sort of clawing back some of those moves. It's actually trading closer to 19.16 now, last time I checked. So it's encouraging because it was a bit of concern to see how we were weakening more than the rest of the global currencies. So it's not so much about the dollar, and it's a little bit more about the rand today as we await some significant data out of the US. It's the core PCE that comes out on Thursday, which is a key inflation measure. And of course, we know that interest rates in the US are holding the key to the fortunes of the dollar, which then knocks onto all the other currencies, especially the emerging market currencies.
Yeah, it's so interesting because I'm hearing sort of different stories about how the rand and how investor confidence was either badly affected or was eased by the finance minister's speech. Is it quite fickle? I mean, is it up or is it down?
So it is fickle, and I think what happened was at a high level, at first glance, the speech was positive. There was a better debt profile, it looked like a better trajectory on borrowing and spending. But of course, what happened is when you look into the detail, where is the spending going? It was being driven to non-productive investments. And of course, we've seen in the past, every time we come up with a solution and we make promises, those promises are invariably reneged on and adjusted higher once again. So I think a bit of digestion following the first day, and the market started to shift its sentiment a little more to the negative side.
Yeah, let's talk about the negative side of things. South Africa seeing 109 businesses close down in the first month of this year, a massive 35% increase compared to the same time last year. That's according to Stats SA's latest data on liquidations in the country. That's incredibly worrying news, and that's a lot of jobs lost.
Yeah, that is certainly a worry. And if you look at the most recent unemployment data, that supports that. We saw a rise in unemployment for the first time in 3 or 4 quarters. And I think also a little bit of perspective, though, if you zoom out and you look at the comparative of 3 months to January rather than just the 1 month, over that 3-month period, there were actually slightly less liquidations, 3.9% drop in the number of liquidations. So if you extend it a little bit, it looks less dire. Mm-hmm. But, I mean, we shouldn't fool ourselves. We all know what is of concern is that the mining data, all the retrenchments that the mines are talking about, are not yet being reflected in the economy and certainly not in those numbers. The leading detractors in that data was actually businesses in financial services, broadly speaking, which encompasses real estate and insurance and the like. And then following that was trade, catering, and consumer services. So it definitely is a bit of a worry. It's not as bad as it looks, but we need to keep an eye on how the next few months play out and certainly stay close to this one.
Yeah, especially given what Amplats was saying, right, about having to cut almost 4,000 jobs.
Exactly. And not only Amplats, Implats has said the same, Sibanya has said the same, and a number of other smaller and different miners. So it's becoming a trend. It's a phase we're in as the commodity cycle is moving toward a trough, and this is potentially the start of. There's still more to come behind that.
Sure. All right. Shall we take a look at some other economic data? Automotive group Motus reporting a 27% drop in half-year profits. What's your analysis of their performance?
Yeah, I would say that is a little bit disappointing. I think the revenue grew 12%, the operating profit grew 1%, and then the net income fell 27%. And looking on through the numbers, you can see they took on a lot more debt over the past year, So the finance costs are costing them have significantly increased, and they've had to invest quite a lot more into the business to build their fleet. They've invested into the fleet, and they've also had to they're carrying too much stock. So they are overstocked at this point in time, which means money is tied up in something that is on the floor rather than out in the market, and it's accrues interest on that. So it does demonstrate a tough environment. They're struggling to move stock through the cycle. They have got a plan to unwind and destock. So it reflects a tough result. I mean, we all know how tough this economy is. We all know where consumer confidence is. And I think what we really we need to look toward the potential for rate cuts, for an uplift in sentiment and potential improvement in the economic outlook. It's not yet clear when that turning point comes, but that's the point at which you can start looking at a company like this, which is highly consumer confidence sensitive.
Yeah. And then Grinrod has a trading statement out as well. What do those numbers look like?
Yeah, that's a very solid update. The earnings are 27 to 33 odd % better. Remember, they're playing in port, logistics, and freight, and they've been very clever. They've actually entered into a number of agreements in Mozambique. So they're actually benefiting, some of their business is benefiting from Transnet's woes, and a lot of coal and other things are being freighted through Mozambique now and going through those ports, to the point that there's actually a significant new investment taking place over the next 3 to 4 years to ramp up that scale and capitalize on some of the weaknesses internally in South Africa. So that is a business that's quite well positioned to navigate some of the challenges that a lot of our industrial companies are facing and the mines. So I'm not surprised to see that number. It's only a trading statement. We'll have to look a bit deeper when the results come out, but it looks good on the face of it.
Okay. Shall we end it off there on a good note for a change? Grant Nader is a senior portfolio manager at Benguela Global Fund Managers. Grant, thanks very much indeed for your time.